Ladies and gentlemen, good day and welcome to the Q3 FY21-22 earnings conference call of the Karur Vysya Bank. We have with us today the management team of KVB, represented by the MD and CEO, Mr. B. Ramesh Babu, President and Chief Operating Officer, Mr. Natarajan, CFO, Mr. Ramesh Murthy, Company Secretary and Compliance Officer, Mr. Srinivasa Rao. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. B. Ramesh Babu, MD and CEO, to take us through the highlights of the quarter gone by, after which we will open the floor for questions. Over to you, sir.
Thank you. Yeah, good evening to all of you. I welcome you all to the bank's earnings call for Q3 of financial year 2022. We trust that you and your colleagues, family members are keeping well, in good health. Reports that the impact of third wave of COVID virus has not been as severe as the earlier wave, which provides succor. Going ahead, we are confident that the spread and impact of this mutant virus will be controlled, aided by increased vaccination coverage. I take this opportunity to extend our gratitude to our team members for continuing to extend required banking services to our clients despite unfavorable environment. We are also pleasantly surprised that the third wave did not impact the business momentum across most sectors, particularly in the southern states of the country. Globally, many countries, including US, have initiated measures to contain inflation, and the impact is already felt in the Indian financial market. We are closely observing the policy measures of RBI, which may have an impact on the liquidity and interest rates, and we are prepared to meet the challenges, if any, which may arise. In line with our guidance indicated in the previous quarters, we are progressing well on the basic parameters and confident that we are moving in the right direction. This is reflected in our third quarter ROA reaching 0.93 on an annualized basis, and ROA for the 9-month period on an annualized basis stands at 0.79. Let me take you through a few important business parameters of our Q3. First, net interest margin, NIM. We continue to maintain NIM at about 3.5% level for quarter 3, despite competitive pricing environment in the market. Even though the yield of the funds came lower by 16 basis points during the quarter, the stable low-cost deposit have aided a 10 basis points reduction in the cost of deposits to 4.22%. Hawkish trends in the financial market clearly indicate hardening of interest rates in the near future, and we expect that lower duration of our investment portfolio will aid in improving our yields on investments and also mitigate MTM impact. Our focus on NIM continues, and the same will continue to be at 3.5% plus levels. Operating and net profit. Net interest income has increased to 687 crores, up by 103 crores from 584 crore during the quarter ended December 2020. Fee-based income has increased by 7% year-on-year to 162 crore. The same is up by 13% on a sequential basis too. Employee expenses were lower during the current year as compared to Q3 of the previous year after normalizing one-time items. Details of the same are available in slide number 7 of the investor presentation. Employee cost for the current quarter includes an amount of 27 crores, which is the second installment of the amount amortized to meet the enhancement in the family pension obligations. You are aware that RBI permitted banks to amortize these expenses over a period of 5 years. We have decided to account the entire amount of 81 crore based on the actual valuation during the 3 quarters of the current year itself. So the residual amount to be amortized stands at 27 crore as on 31/12/2000 expensed during the last quarter of 21-22. Other operating expenses went up by 13% during the quarter as compared to a year ago, Reasons for increase include transaction fee incurred on the digital transactions. Correspondingly, non-interest income too has risen as stated earlier. We have initiated various cost control measures and closely monitor the various items of expenses. Operating profit, after recasting the depreciation on investment as per the revised disclosure requirement, increased to 402 crores, higher both on YOY basis as well as sequentially, that is up from 375 crore earned during the second quarter of the current financial year. Our follow-up and recovery initiatives resulted in lower slippages. As a result, our credit-related provision requirement reduced to 135 crore, which includes restructuring provision also. In spite of increase in bond yields, there is no significant MTM provision on investments on account of our conscious decision to maintain lower duration. So the depreciation numbers for the quarter pertains to SR provisions. Net profit has risen to 185 crores for the quarter, registering growth across the quarters. That is higher than 165 crore in the quarter 2 and 109 crores quarter 1, improvement on all fronts, net interest income, other income, as well control over expenses and lower provisioning requirements have led to the positive impact on the bottom line. This is the highest quarterly profit earned by the bank during the past 18 quarters. Slippages and asset quality. Gross slippages were at 223 crores during the quarter, and for the 9-month period, the same was at 621 crore, which works out to around 1.11% of the loan book. Our recoveries, upgrades have again surpassed slippages for the second as well as third quarters, resulting in net slippages being negative to a tune of 84 crores during the quarter. There is a reduction of 255 crores in GNPA during the 9-month period. There was no technical write-off or SR transaction during the quarter. We are working towards keeping the gross slippages well within 2% of the loan book at the end of the financial year and are confident of meeting these goals. We aim to achieve negative slippages in the coming quarters also. SMA 30 plus balances at the end of quarter 3 stood at 737 crore, which is 1.2% of the loan book. SMA book includes jewel loan balances of 279 crores. So due to lower slippages and recoveries, GNPA level has come down by 41 basis points during the quarter to below 7% and stands at 6.97%. Our aim is to reduce it to below 5% levels by 2023. Our net NPA level has further reduced by 86 basis points to 2.47% during the 9-month period. Bringing net NPA to below 2% will be one of our most focused items on the agenda. Restructuring book. Our overall standard restructured book as of 31st December stood at 1,616 crore, which is around 2.9% of our loan book. During the quarter, 84 crore slipped to NPA, and further details are available in our slide number 28 of our presentation. In terms of regulatory guidelines, we have provided 146 crores towards this book. Coming to the growth, we have achieved total deposit growth of 8% year on year and major contribution from CASA segment. Our current and savings book are growing well, recording 12% growth. CASA share is at 36% levels, and we continue to work for further improvement. Our banking application is working well, and we have been continuously adding many more features for better customer experience. Our agricultural loan book, which mainly consists of jewel loans, grew by 12% year on year and sequentially by 3%, and we expect that the trend will continue in the fourth quarter. We are in the process of implementing interest subvention model of agriculture loans at our rural and semi-urban branches. This will be helpful for the branches to expand our customer base. Retail loans under personal segment have grown by 11% year on year and sequentially 3.4%. This is predominantly on account of residential mortgages and jewel loans. Our pre-approved credit card program has been rolled out to our existing customers during this quarter, and we propose to scale it up further to our existing customers before opening up for the general public. Our overall jewel loan book has grown by 14% and constitutes 25% of our loan book. LTV stands at 72% with negligible NPA and SMA 1 and 2 at less than 2%. The entire loan disbursement process is fully migrated to digital modes to ensure 100% compliances. Commercial loan book has grown by 8% year-on-year and close to 5% sequentially. Though there is a visible increase in the sourcing and disbursements, existing book rundown and non-availment of sanctioned limits have impacted the growth. We are focusing on this segment very closely, and we expect that we will be in a position to improve further and achieve double-digit growth. Corporate banking growth remains muted and there was a marginal degrowth. We have made fresh disbursements of 687 crores during the quarter, and due to the pre-closure of certain large accounts, the growth is not visible. However, we expect a moderate growth of around 5% during this quarter. Both Neo and precious metal portfolio continues to grow sequentially. Our Neo business model, transaction banking, bullion business, and co-lending business models with NBFCs are doing well. We are now focusing to scale up our activities under these business segments. We expect to achieve a growth of 10% overall in the loan book during this year. Our CRAR continues to be robust and is at 18.79, providing us a comfortable headroom for growth. Our liquidity is also comfortable and we continue to maintain LCR of about 200% levels. Treasury contribution is on an even track. Duration of AFS book is 1.92 and we do not foresee any material MTM losses in the current quarter despite raising interest rates. We have indicated during the last meeting on the launch of government business. We are glad to share that our customers are now able to remit customs duty payment through IceGate portal of Central Board of Indirect Taxes and Customs. And integration work is in progress for direct and other indirect taxes. We are now working on to expand our business relations with other central and state government departments and undertakings. We have launched account aggregator services and integrated it with our digital loan origination system. We have successfully tested API services with CERSAI, and this will enable us to upload required data to CERSAI registry without manual intervention. Let me conclude by stating that the financial performance for the quarter is an important milestone considering the continued improvement in the performance and is an indication that bank is moving towards a better times ahead. I thank you all for your participation and will be glad to accept your continued feedback. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question now. Ladies and gentlemen, you may press star and 1 to ask a question now. The first question is from the line of Prashant Poddar from ADIA. Please go ahead.
Good evening, Mr. Babu. Thank you very much for the update and good results. Sir, I have a very quick question on the retail growth, which still looks modest compared to many of your competitors, despite having a much smaller
And which growth, Prashant? What did you say? Sorry, we missed that point.
The retail growth is
Retail growth
compared to what we are seeing even in the larger banks.
Okay.
In both secured and unsecured. The second question is, and even in commercial, we are seeing the growth. There is an uptick in the quarter, but we've seen stronger growth in other large banks actually. So the first question is related to growth, both in terms of branch additions. Are you planning any in the next 1 or 2 years? Would there be a net branch addition that is? And what would that mean for the sustainable growth rate after this year? The second question is related to the digital penetration. While it is at 93%, the digital volumes when we look at it, again it is modest, despite being a small bank compared to many large banks. It feels like that you have relatively low engagement with the customers when it probably product per customer or the transaction that you have with them. Can you help us understand how do you plan to improve that so that it has a rub-off on?
Sorry to interrupt you, Mr. Prashant, but we cannot hear you clearly, sir. Mr. Prashant, sorry to interrupt, but your voice is not properly audible.
So, can you hear me now?
Yeah, okay, it's all right, Prashant. What all we could hear, to that extent we'll respond. If at all some gap is there, you can supplement that. Okay. The first thing what you were asking about the business and the growth, and you were also mentioning about the branch expansion. So this year actually we are planning to open around 10 branches. So if everything is okay, because we are trying to get the branches, the location, all these things and all, we are on the job. So that will be there. But irrespective of the branch expansion, the question is business growth is something different, because rest of the network, whoever is there. So that way, organic and inorganic we have been trying. If you look at our retail growth is concerned, a home loan business you would have seen around 10% growth. But naturally, when the rates of interest actually are 6.5 are being offered by a few big banks, so naturally a few of the loans will automatically go out also. And we are acquiring also, because majority of our portfolio is self-employed, and these sort of thing and all, a robust growth we have seen, and quarter on quarter, December quarter is one of the highest quarters we have booked under the home loan. Coming to LAP to some extent we have given a lower preference because of these pandemic and all the cash flows, how they move we do not know. Now we have restarted that, so that way the numbers started coming in the LAP front. Coming to the personal loan portfolio, last time we have told our overall portfolio is 500 crores. We found a bit of stress in the first wave as well as second wave. So under these circumstances, we thought it is not fair on our part to open the floodgate at this stage. So now we have reassessed our position and all with revised measures. So in a calibrated way, we are opening and we are going ahead on the personal loan front. Vehicle loan is concerned, as all of you know, that the chip shortage, these issues are there. So despite that, what can be done, we have done that. But your point is well taken. How we need to get it up on this particular front and all, we will see that. Coming to commercial, if you look at it, commercial, suppose 1 or 2 years back, actually the things were actually negative. We were going and all, we were continuously losing the business. So it took some time for the bank to understand, modify the processes as well as the product. With all these things, this is a quarter where every vertical has contributed, including business banking unit, which was giving around 300 to 400 crores of degrowth earlier. This year, for the 9 months period, we have grown by 300 crores. So likewise, every vertical, including Neo, commercial, retail, every vertical has grown. So that is the reason we are able to show. With the momentum what we have got, we are reasonably sure we are activating all our branch network as well as our distribution network also. So based on that, we will push it further and all. So that way, we are reasonably confident that by 10% at least we will get. But next year, we will aim for the higher numbers. Coming to the digital, what you are saying, so 93% if you say that, you see the number of transactions which were coming to the branches when we have reduced it, naturally the more free time we are giving to the branches and all. So as you said, we are focusing on this process of the product per customer and how we need to engage more with the customers and all. So these sort of things we are already on the job. we are actively leveraging our analytics team for this purpose and all, and we are getting some sort of a pointed leads where we can actually convert them. So that way we are on the job, and product-wise also we are trying to see product per customer. So what is the level of penetration, insurance, how much, all these things we are internally working, and so you will be able to see the traction next year.
Okay. So just one more addition on that. Could you share any data on liabilities, account number of liabilities that you've done this year compared to last year? That's all.
Liability in the sense that number of accounts you are talking?
Yes, sir.
Number of accounts compared to last year. But last year, more or less, we have done better than, slightly lower than last year. The reason is, so the pandemic of this April, May has hit us a lot. During that time, we couldn't do. So then again, if we look back from July onwards, and we are much, much better than last year. So one more thing what I can say, the quality of accounts what we have opened, the per account balance and the average outstanding for the lower number of accounts though we have opened, the amount of business what we have got it out of these lower accounts is much more than last year. So that way our focus is not to go for a granular, smaller, unproductive accounts, and to go for a qualitative account, quality accounts and all. This has been percolated, and boys are doing that.
Sure, sir. Thank you very much.
Thank you. Yeah.
Thank you. The next question is from the line of Ranesh B from ICICI Securities. Please go ahead.
Yeah, hi sir, and congrats on a great set of numbers.
Thank you, Ranesh. Yeah, please.
So, sir, the first question is on our other operating expense. In Q1, in absolute terms, this number used to be 200 crore, which has gone up to now 240 crore. So Q2 it went up to 220, and now it went up to 240. So just trying to understand, where we are incrementally spending.
Nice. There are two aspects you need to look at it. First quarter cannot be a representative quarter for comparison now, because once the things started opening up, so people started moving out, and we need to spend on this also, because until unless you spend on this, you will not get the business there. So Correct. Not only that, suppose the upfront for the acquisition, what all you are going to pay on the assets. So this, it may look like an expense this quarter, but you need to amortize, let us say, home loan. For a DSA, you are paying something and all, but you need to amortize that over a period of 10 years. So that way, the sort of acquisition cost is also there, and we are also getting feet on street for the liabilities also. We are mobilizing, and rest of the expense also, because we are making the people to move around and get the business. This has gone up. Another thing what we need to see is the UPI expenses. UPI expenses actually, so because the number of transactions are going up month after month, so those expenses are going up on which we have no control. We need to see how we need to mitigate that.
Got it. So it's a combination of business growth.
Absolutely.
Digital growth. Okay.
No, otherwise we are trying to have every headwise control. So everything unnecessary, we do not want to do it and all. That's what a lot of sensitization awareness has come amongst all.
Got it. No, I was just wondering, sequential growth is some 9% versus loan growth of 4%. So I was just trying to reconcile that number, sir.
Yeah.
Okay. And sir, second question is sort of follow-up about what Prashant has asked. So sir, if I look at our asset quality performance, it has been by far one of the best on the street. When we look at SME pull-ups of 1%. So clearly we are far behind the balance sheet problem. And again, when we look at our liability franchise and when we look at our cost of fund of around 4.4%, it would be one of the lowest on the street. So sir, why not pushing for the growth aggressively and gain some market share from NBFCs and SFBs? I was just
I'll tell you. What happens, suppose if you have to push aggressively by reducing the pricing, there is a major risk what you find is a closely knit market. Whereas many of our customers, particularly when in South, particularly in Tamil Nadu, if you look at it, if you make a rate of interest of one account from 9% to 7%, within 5 minutes the message spreads. And around 20 accounts will come immediately in a queue to reprice. So first of all, I may get another 5 crores business or 10 crores is immaterial. My repricing first of all comes down from 9% to 7% for 50 crore. So I had to go in a calibrated way. That doesn't mean that you see the number of loans what we have booked under the commercial segment where this pricing is not a major issue. That is up to 2 crores. Likewise, at the business banking unit up to 15 crore. That is the reason here they are not price sensitive customers. So we are pushing a lot this year. That's the reason you are able to see visible growth under this segment. Whereas the corporate, if you go for that, so despite that good corporate accounts and all, we have done that. AA, AAA, these cases are there, we have done that. But across the board, if we card rate itself, if we change, there will be a total change, actually repricing of the whole portfolio. That is the risk.
No, sir, I agree. I agree with that. I mean, there could be some pressure on margin, but somewhere down the line, we have to, strike a balance between, rate sensitive growth plus hard growth. I mean, so I was just wondering till what time we will be happy with 10% growth.
Okay, we'll do one thing. We'll do our own working based on suppose pricing in few locations which are price sensitive locations. By reducing the pricing and all, how best we can grow and all, accordingly we'll take a call on that.
So, I mean, is there a thought process about all these things, sir?
Every day. I'll tell you the number of cases what we consider every day for a reduction. So many cases we'll be doing, and then we'll be seeing what is the market, what others are doing, how we need to frame it. All these things continuously, every level people are looking. That is a precise reason you are able to see our NIM more or less we are able to maintain at that level and yield also. But otherwise we are very much aware we are not allowing many accounts to go past us, and simultaneously we are acquiring fresh accounts also.
Got it, sir. This is very, very helpful, sir. Thank you so much and all the best, sir.
Thank you.
Thank you. The next question is from the line of Jai Mundra from BNK Securities. Please go ahead.
Yeah, hi sir. Thanks. Good evening and thanks for the opportunity and thanks for hosting the call on the same day. I have few questions, sir. First, again on growth, sir. So if I see your commercial growth, why you had mentioned that you have done a reasonably good business, but there is non-availment in the facility of this underlying borrowers. And if I see your average, I mean the detail that you have given is your commercial, majority of the commercial is above 10 crores. So could you comment that, how is the competitive intensity here? Because it looks like, large banks have come down to, this ticket size in the last 1, 2, 3 quarters. So any comments there? And second is, if you can share what would be, let us say, within commercial, what could be balance transfer ins and balance transfer out, and is there any change in the trend there?
Yeah, first of all, coming to competition, so competition is not accelerated in this quarter. It is there for the last 2 years. Actually, when the COVID started, every bank started to get the others accounts and all. So, but despite that, we also knew the trick of the trade, how we need to manage. So that is the reason this quarter, despite all these issues and all, we knew our strength. Textiles, we are pretty good and all. Traders, we are good and all. So to analytics also, we did what is our expected loss going on with all these things. So we worked on that. So that way, 10 crores up to 15 crore also. So granular portfolio under the BBU is growing pretty well. We have a strong pipeline also for the BBU. So that way competition is there. I am not disputing that one. But despite that, so the potential is also so much. That's why we are able to grow this year under the commercial. Coming to the organic, indirect and direct, if you say, everything what we have done is absolutely from our branch channels, and we have done that and all. So no any bulk here under the commercial.
Right. No, so what I was asking, sir, let's say 2 years back, if you had 6 new customers and maybe 2 customers outgoing to competition, has that changed over the last 2 years that, you may have to dig deeper into newer customers because your BT outs may have increased? Is that the, how would you look at that BT ins, new customers coming in and existing customers moving out?
Yeah, I'll just share. My president also will supplement. Now you see, very correct, not only for our bank, every bank, more or less the outflow compared to the previous years and all, the numbers have gone up. But we have managed in such a way, the inflow is much, much higher than the outflow to take care of our growth as well as for the outflow. So that way, few accounts what we have lost consciously, which is an exit market account, there is a weakness. So many collateral issues, all these issues are there. Despite that, others are offering on a platter, we are handing over. Because in the normal course, you may not be get rid of that. It is an occasion now others are taking, we are giving it. But wherever the quality of the account is good, we are trying our level best, everything what all we need to do, including the rate of interest what Renish was mentioning. We are giving the competitive rate what others are offering to retain them. So that way the outflow is concerned, yes, numbers have gone up relatively compared to last year, but the inflow is much higher than the earlier years. So that way overall we are able to grow well.
Jay, actually I would like to add a couple of points here. So our commercial lending is bifurcated into small business group and business banking. Small business group takes care of up to 2 crores and more than 2 crores up to 15 crores taken care by the business banking. So now we have created a very clear cluster for the business banking at all the important locations. Specific RMs are posted. Now if you see when incremental growth other than our existing customers normal growth, so only balance transfer is possible because there is not much new projects coming up, and the only way is now we have to take over the good accounts from the other banks and the NBFC. That is what we are trying to target. And if you see comparative study, for example, the previous years and now, definitely the numbers, the sourcing numbers have increased, both in small business as well as the business banking. Only thing is, like our MD has already mentioned that the unavailed limits and the cautious people, they reduce the limit. This type of things growth is not reflected. But having said that, very good sanctions are made during the past 6 months period. So if you take the availment from this, it's only 40 to 50%. We are confident that this quarter, being the busy business, particularly on the textile, the cotton, the season started, and chilies season will be starting, and other trading activities, definitely the availments will be more. So whatever the availment from the existing sanction, we are expecting that there should be a sizable growth increase will be there. So going forward, the growth has been our mantra. Every week we have been continuously see that how we can push the growth. We have implemented a lot of new strategies, and we have put a lot of people in the market, so that all these things will gradually upgrade our the growth from the single digit to at least 10 to 12% in the coming quarters.
Understood, sir. Thanks for that elaborate answer. Secondly, sir, if you can share the outstanding provisions against restructured loans. I think some 1,600 crore is the restructuring standard loans. How much is the provisions that we are carrying against these?
146
Jay. 146 crores is the overall provision we are keeping it for restructuring book.
Right. And is there any other pool of provision? So this is 146 is pertaining to restructured, and then you have, PCR which we have increased in this quarter, and there is no other contingent provision, right? By whatever names.
No, we don't have any other contingent provision.
Sure.
Yeah, this 146 is the standard restructuring book, Jay.
Correct. Okay. And last few questions, sir, on NARCL, right? I think this now bad bank has already been, it is now implemented. How much of the assets have you earmarked which you could transfer, let's say in the near term, and what would be the resultant impact on what could be the provision right back there? Because I believe all this would be like 100% provided.
As per the initial indications a couple of months back, when IBA called for the details, I think 9 to 10 accounts were in the list. But if you notice, a couple of days back, the SBA chairman in the press, he was mentioning that they will be taking only 15 accounts for this financial year. We are trying to get the details of these 15 accounts, and I don't think any large accounts will be there. I think this quarter, based on our indications from the bad bank, I don't think much progress will happen this quarter. Maybe in the next financial year, first quarter, there are opportunities are there.
Okay. So maybe if you were to go by that 80,000 first tranche, forget about the last 7 days development wherein there are 2-3 tranches. But this 9-10 accounts, what would be your kind of a gross exposure and expected cash recovery?
So, actually, as per the initial indication, I'm not sure about the final accounts. Our 7 or 8 accounts are put together 600 to 700 crores is the book balance. And these are all majority of the books already it's fully written off, because even one of the primary condition for this is we have to provide 100%. Some of the accounts is technically written off, some of the accounts where we have 100% provided. So in that way, if it materializes, this the 500-600 crores, it must be, they have to work out what is the ratio and all. Everything will go to the cash only.
Correct. But okay, understood. But ballpark number cannot be more than 100 crores, right? I mean 600-700 crores. It cannot. It should be less than 100 crores.
Yeah. So now all the realizable value and all these things we are yet to get from them. So once they worked out what would be the percentage. Basically, 15 is the cash component and the 85 is the SR component, and they have to value what is the value they are transferring. That is we have to work out.
Correct. Understood. Understood, sir. And on your collection efficiency, if I see the slide that you have given very good details on collection efficiency, it is better in December versus November and versus let us say October. Does the trend continue in January, or there is some impact because of Omicron, etc.?
No, there is no change in the trend. It continues. That's what it's also reflecting in our SMA 30 plus book. It is the lowest number we have achieved. And as far as in January also the trend continues. We don't see any big change in the collection numbers, Jay.
Right. And this, and also, sir, on slide 14, we have given the digital loans and the origination. From last quarter, I think there seems to be some moderation in the momentum, that the sourcing has declined, slide 14, and then disbursement has also been flattish kind of a thing. Yeah. Is that to do with what is happening here? Because we have a decent fintech partnership and few neo program, etc., all put together. So what is the reason for slowdown here?
No, you understand the September one is slightly deceptive. The reason is, so first quarter we had to take a beating on account of the second wave. So that way that accumulated what all a part of the first quarter also have come into the second quarter that way. But whereas this third quarter, if you look at it standalone, we had to do it. So that way this number, if you look at it, the disbursement amount, if you look at it, more or less same. So 575, 581. So the trend is continuing. So the backlog of first quarter, what all have come, that is the reason second quarter looks slightly on a higher side.
Great. Understood, sir. Yeah. And last clarification, sir, from my side, this SMA 1-2 number that we are showing, this is for entire bank, right? It is not for commercial or corporate book.
Yeah. Whole bank.
Yeah. Great. Okay. Thank you, sir. Thanks a lot for answering all those questions.
Okay.
Thank you. Participants, to ask a question, please press star and 1. The next question is from the line of Vikas Sharda from NT Asset. Please go ahead.
Yeah, hi sir. 2 questions. One is that you mentioned that you would target, say, FY23 less than 5% gross NPA. So would be good to understand, what assumptions you are building into that, and how do you plan to achieve that? And second is that you achieved basically 10% ROE this quarter. So, going forward, what kind of ROEs are you looking at, and do you think that now double digits is a new normal for you?
Yeah. First thing, GNPA, when you said, actually our planning is for actual putting in labor and in a harder way to recover only. Okay. So on one side, this NHI, these sort of things will come up. I am not disputing. But whatever it is, next year we have an elaborate plan for recovering particularly by auctioning the assets, what all are there. Many times last year also when we tried, some quotes are not working, or actually the COVID wave. So with all these things coming to this thing, and also we want to push this particular vertical very critically for the next year, so that we will get maximum for an organic reduction in the GNPA. In addition to that, inorganic may be getting and all, I am not disputing, but our efforts will be towards the organic reduction. So coming to ROE is concerned, so agreed, because we have been on this path continuously, because the first meeting when I had with the analysts and all, the ROA of discussion has started. So with that, we have been every vertical, we have been working on those lines. So we are confident that because every lever is working now, so we will be able to move forward, and this double digit under the ROE, it will improve further and all. Our motto is also the same.
Okay. Yep. Perfect.
Thanks.
And how sure about this, the gross NPA target? I mean,
sure. This, you see, you need to aspire for a number. So if you do not even aspire, entire team, they will not have any goal to reach. So that is the reason if we talk about 5%, entire team will be geared up to move towards that. Even if I'm 5.2, 5.3, but first of all, we need to aim for 5%. Otherwise, if I say 6%, it may be easier. Or I cannot say 4%, which may be difficult.
Because a simple point I will tell you. See, currently our gross NPA number is 3,800 crores. The simple working is, what we have done is, we have listed out the accounts, which are the accounts that are a probable chance in the next years. So like that, we have worked out some 800, 900 crores worth of accounts we have listed. And then we are aspiring that, okay, this 800 account we can push, and if you reduce by 3,000 or less than 3,000 crores, and increase in the advances, so naturally the number will come to 5%. So that's why only it is predicted with some very clear mathematics.
Likewise, the NCLT cases which are in advanced stage, likewise retail around 1,400 crore portfolio is there under NPA. So we are trying different means to get money out of that. So that way, for each of the segment, we are trying in a different way to get some money out of that.
Perfect. Makes sense. Thank you.
Thank you.
Thank you. The next question is from the line of Mahesh MB from Kotak Securities. Please go ahead.
Good evening, sir. Just one question to add on to the previous one. In the same slide on that on the vertical-wise NPAs, you've also given provisions this time. In a sense that the provisions on the corporate book is about 60-odd%. How are you seeing this number going forward?
Corporate book, yeah.
You have a number of 1264 and the total NPA.
You want to know what is the provision amount you want? What is that you want? Can you just repeat the question, please, Mahesh?
Sir, in your sense, as per your assessment, you have reached a credit cost today which is little less than 1%.
Correct.
But there are some segments like corporate where the NPL coverage ratio is still at about 65-odd%.
Okay.
In your assessment, where does this go, sir? Does this number have to go up materially as you get into as these assets becomes older from an NPL bucket perspective, and the aging provisions will be higher, or you think you can control it at these levels?
Mahesh, the current percentage is 68.8, at most 69% provision we hold. And all the historical legacy accounts, all these things are by and large, it's fully provided, except one or two accounts that also over a period of time it can adjusted. So what we believe that going forward, this number will not, there will not be any large requirement from this number. I'm talking about regulatory provisions. So for a prudent provision, all these things, yes, that is a different issue. On the IRAC norms, if you ask, there is no need for providing much provision except some sort of aging provisions where the recent NP account. Otherwise, the old historical legacy account, all these things is all completely provided.
Okay. So in your sense, if I were to just take this forward, if the net reduction is, let's say the recoveries and upgrades is higher than slippages, do you think next year credit costs could meaningfully decline as well?
Ideally, we too think like that, Mr. Mahesh. We sincerely hope for that. So that is the reason we are working on these lines. You have seen that last 3 quarters continuously how we are able to bring it, because we started controlling from the SMA itself. Earlier, we were focusing on the NPA. Now, SMA itself, when we start working, and it is working well, more or less. So, we are also aiming in the same way.
Okay, perfect. That's nice to hear. One last question, sir, on the OPEX front. Currently, if you look at the numbers, we are doing approximately about 470 to 480 crores per last couple of quarters. Can this number hold on to these levels for at least another year, or you think that you may have to spend a lot more than this?
Hey, you see, ideally, you may have to invest something in, suppose, IT. So, you have to grow continuously, or sometimes the commissions for the acquisition and all you may have to pay. So, what we'll do is, to the extent possible, which are controllable, we'll try to control. But trying to have, and too much of trying to have a control on this, and focus is on the containing the expenses rather than on the business. So, it may actually deviate the focus. So, that is the reason we are planning that we need to grow much better in the income side so that overall the ratios are better. But whereas expenses are concerned, once the income grows, automatically percentages also will go up. Not an issue. Everything will be improved. So, expenses are concerned. So, we are well aware and we are trying to contain every head. Wherever not warranted, we are trying to reduce it. Even right from the rental also, many places it has been renegotiated, it has been brought down in the COVID. Likewise, ATMs, everywhere, every head of people are seeing what can be renegotiated, what can be brought down.
If I may add, this is Ramesh Murthy here as CFO. In our department in finance, every single line is questioned, scrutinized, and we go back to the departments which are incurring these costs as to how can it be brought down. So there is a tight control which is being managed on the expenses.
Perfect. Now, I'm just trying to understand if the margin levers are not is quite limited from here onwards, and if the balance sheet is going to grow, let's say, a little over 10%, the levers on ROEs for next year essentially comes only on credit cost, looking at the conversation that we had now.
Like credit cost as well as the business also.
Yeah, perfect.
Yeah, but Mahesh, you have seen the NIM, no? So during the past 6 quarters, how this NIM has translated, particularly on the cost side, and there is a lot of focus is given on the acquisition, the CASA, the deepening. So we continue to penetrate the market, increase our the CASA segment. In that way, we're trying to retain the whatever benefits we already accrued on the cost of deposit side.
Perfect, sir. Perfect.
On the lending, on the yield side also, for example, we have very low duration. So in the going forward, all our almost 2,000 crores worth of investments which are maturing in the next year, it will all repriced for a better price. So that benefits also will accrue. So not only on the this credit cost, but the general growth as well as on the other profitability, we are very confident.
Absolutely. Thanks a lot for this.
Thank you. The next question is from the line of Prashant Poddar from EDI. Please go ahead.
Yeah, am I clear?
Yeah, please clear.
Yeah, Mr. Babu. So just a clarification. As you've explained in details, we have to congratulate you for being able to maintain margins in this tough environment where you don't do much unsecured loan, honestly. So to be able to grow at 10% with relatively weak CASA franchise, honestly, it's a pretty good job. What advantage you have though is the smaller balance sheet than many larger peers, right? So we would hope that you will be able to explore and identify some other customer segments, some white spaces where you can get your yields without much risk to the credit cost. So two things we have seen improve: operating expenses now stabilizing, and credit costs, actual credit costs being close to zero. Actually, it's all old costs. So we don't want to lose that in this in haste of growth. So we would appreciate if you grow at your comfort, but would be, given the balance sheet size, hopefully you are able to explore segments where you can do better ROA.
In fact, we are extremely between the call got disconnected, and you were mentioning about these margins and all, CASA and all. At that time, the call got disconnected. Extremely sorry. Can you please repeat, please?
No. So I was saying, sir, that we don't want you to lose your credit cost and credit cost success. So it is only that we were saying that the balance sheet is small. So maybe you'll be able to explore areas which aren't very high credit cost, but give you your desired yield. So I have that was just a suggestion. I have one last question, which is on the pool of NPL that you have on the balance sheet, plus return of accounts that you have. Put together, what would be the size of commercial and retail assets? Because corporate there is much hope of recovery. So I just want to understand what is the pool of NPL plus written off in commercial and retail, which is mostly secured, both of them.
Correct. Written off, if you look at it, majority of the portfolio is corporate. Okay, the retail portfolio as well as commercial, it is a pretty small portfolio. Wherever they are collateralized, so definitely we are going forward, and so we are trying to get the court orders and all disposal, these things. So that is not an issue. But rest of the cases where the consortium member, we are a member of the consortium bank, the written off, so NCLT, all these cases are there. So many ifs and buts are there. That's why we have absolutely no control straight away to any number for the written off is concerned. So coming to rest of the portfolio, even other NPA also. So as I said earlier, we have given some focus for, because if you look at our collateral, we have a slide also, except 922 crores, majority of our portfolio is more or less collateralized. So the collateral realization, it had some sort of a problems for the last 1.5 years due to COVID, because courts were not actually functioning and they are not giving, even if we approach them also.
You spoke about that.
So that is the reason. Because these rest of the cases, so we will be focusing on that. We will be able to recover, not a problem. Corporate only is not in our hands for the time being. Yeah.
And these cash recoveries are recognized in other income, right?
Yeah. Correct.
Or upgradations would reduce your slippages, right?
Slippage, yeah. The provision reversal will be there for the upgradation. So whereas cash recoveries in respect to written off will go to other income.
So looking at this pool, would you be expecting almost negligible slippages, net slippages even in the next year? I think you answered that question partly as an earlier question, but would you be expecting that? Would you have in your assumptions what kind of recovery you could have from the current pool, which will help you reduce your gross slippages next year?
Hey, that's what, Anna. So we mentioned in the indication, the guidance initially, the net NPA as well as the gross NPA. So we will try to work towards that. So it has to be two-pronged approach. One is the fresh additions have to come down, and the second we have to recover. Both we have to do it and all. So it's a two-pronged approach.
Sure, sir. Thank you. Thank you very much.
Thank you.
Thank you. The next question is from the line of Pranav Tendulkar from Red Enterprises. Please go ahead.
Hi. Thanks a lot, sir. Sir, I have just two questions. First of all, in the existing retail and self-employed customer franchise, what are the metrics that you are tracking for cross-selling? And in terms of key products as well as credit risk products, would you like to highlight some of the metrics that are coming out well? So that is one. And second is, when you say that 5% GNPA we are tracking, we are also estimating that PCR at 65%, right? And so the NNPA also could be proportionately lower.
Yeah, what is the second question? GNPA 5%.
GNPA, we are seeing that FY22 will be 5%, and then our PCR at the end of FY23 will also be commensurate to what it is now, which is 65%, right?
Okay. So regarding the first question is concerned self-employed. That's why I was earlier mentioning, saying that so routinely doing will be difficult. That is the reason we are using our analytics started extensively, and they started seeing and what sort of products can be actually targeted to which sort of customer. So that way they have done the customer profiling, and self-employed, salaried, that way they have given it. and which we have taken it and all. Now branches are focusing on that. So that is the reason we could see some sort of a momentum, and we will improve it further. Now earlier, just like that, our teams were doing it. Now it is more focused through analytics, what all is there. That way we are doing. That way the conversion rate is relatively better compared to earlier. Second one is...
so can you give some color? So for example, say we have 1 million customers, 5 million customers, and out of this, these many are approached every quarter.
I am unable to hear you properly, Pranav.
Your voice is breaking, Pranav.
Yeah, can you?
Yeah, better.
Yeah. So I was saying that, so can you share some matrices? For example, say we...
Hello?
Mr. Pranav Tendulkar, we cannot hear you, sir.
Hello, can you hear me?
Yeah, please.
Yes, now please go ahead.
So I am just saying that if you share some matrices, like say we have X amount of customers, and out of this, these many are approached in a quarter, then it will be easy for us to also, get a sense of your efforts. If something related to that is available, or how many customers calls were made last year versus this year, something like that, something to track, to understand the efforts, because the results are not in our hand, but at least efforts could give us some confidence related to future growth.
Pranav, I can tell you, during the past almost, I can say 4 or 5 quarters, what currently we are doing we have started the pre-approved programs. The pre-approved programs, not only for the personal loan, but also for the other auto loans and other loans. The existing customers continuously, now we are in touch. For even including the credit card, the first set of cards were given to our existing the customers. So like that, considering the success of the pre-approved program, we are continuously launching this program to all our products to our existing customers. So that is number one. See, earlier in the past, many of our customers, they used to take an auto or a home from the other banks. Today we made it a point that the first choice should be with our bank. So in that way, that's what our MD has mentioned, that the analytical department is continuously pumping the data to the branches, approaching them. These are the customers where we can approach a home loan based on some algorithm, and these are the customers where we can touch the for auto loan. So like that, these efforts already we have started, and all our sales teams, they are continuously they are doing this job. So we will see that I think if this is since it is giving a lot of results, now continuously we are doing this exercise.
One more point also, Pranav, because we started that recently, it requires refinement. Suppose once we approach them, happening, not happening, once we know it and all, analytics is getting the feedback and all, they are refining, so that the more and more focused lead comes, the conversion will be much better, and otherwise the energies gets frittered away and you will not be able to get the result. So that is the reason, this fine-tuning we are doing and all, and we are in the process.
Right. So it is safe to assume that FY23 will be a safe mid double digit, mid-teens loan growth?
Yeah, definitely. Yeah. We are aiming for that only, actually.
Right, sir. Sir, and about PCR, what is the PCR target for FY23?
So, PCR, let us see, because more or less 63, 65 is there, comfortable position. Obviously, we can take it forward, we will see that. In the meanwhile, recoveries also will be coming, that also we can use it.
Right.
Yeah.
Right. Perfect, sir. Thanks a lot.
Thanks.
Thank you. The next question is from the line of Suraj Das from B&K Securities. Please go ahead.
Hello, sir. Thank you for giving us the opportunity. So most of the questions have already been answered. Just a couple of data keeping questions. Sir, if you can give the breakup for the NPA reduction in Q3, which is roughly around 300 odd crores. If you can give the breakup between what is the recovery, what is the upgrade, and what is the write-off. That is my first question. And the second question I will ask after that.
308. Anything is data you have? 308, page number 25, they have given the NPA reduction.
So actually this 308, there is no write-off involved, Suraj. Only everything is either recovery or upgradation. So if you want, we'll share with you how much is upgrade and how much is recovery.
Okay, sir. Fair enough. And my second and last question is, sir, this unamortized family pension amount, which is roughly around 27 crore. So is this amount netted off against the capital?
Yeah. Netted off against the Tier 1 capital for CRAR computation.
Okay, so it has been netted off against Tier 1 capital.
Right. Correct.
Okay, sir. Understood, sir. Thank you, sir.
Thank you. Ladies and gentlemen, this was the last question for today. I would now like to hand the conference over to Mr. B. Ramesh Babu, MD and CEO, for closing comments.
Yeah, on behalf of the entire team KVB, so I thank all the participants here for patiently asking questions, which shows your interest towards the bank and all. So we'll work further and we'll take the bank forward to the higher levels. Thank you very much for participation. Thank you.
Thank you. On behalf of the Karur Vysya Bank, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.